You're listening to the greatest multifamily investment advice show. My name is Adam Ras, and now I'm talking everything multifamily for an in-depth conversation, and I will be diving deep into raising capital, deals, and underwriting process. Welcome back to the greatest multifamily advice show. Today we have Gary Lipsky, a real estate investor, syndicator with more than 10 years in syndication in different commercial spaces. Please help me to welcome our guest today. How are you today, Gary?
Very good. Thanks for having me.
Thanks so much for being with us today, and I appreciate you taking the time. I think the first thing I would like to start with is your journey with syndication. What was the motivation for you to start on syndication, fund, multifamily on a bigger scale?
Yeah, I mean, I've been an entrepreneur my whole life, and um, I knew the people that were very, very successful always had real estate, and so um, even with my personal residence that I bought, when I was having a baby, and I was looking at that to help, build my net worth. It wasn't like my forever home, like my parents thought of that, and so that really kind of got the bug into real estate. Um, but I wanted to do more, and I had a single family rental. I was leapfrogging into better neighborhoods. And then I sold a business at the end of 2016 and started investing in other people's deals with my retirement money,
Mm.
and as a way to learn from operators what they were doing good, what they were doing bad, and then just getting involved in different groups and studying, really diving in, and then started doing my own deals soon after, and it's just been quite a ride since.
So right now, as we spoke before the show, you're focused more in the Midwest, especially Tucson, Arizona. Was the upside for you to choose to be on your local market?
Yeah, so I live in LA, and um, Phoenix and Tucson are great markets. Tremendous population growth, tremendous job growth, low cost of living, job diversity, and it was also easy to get to. I can be there on a consistent basis. If I like the Florida markets, but I've got to fly across country. I can drive to Phoenix or Tucson, or I could fly. It's an hour flight, so that was important to that accessibility. It's very landlord friendly.
Mm.
So those are the reasons why I choose to invest in Arizona.
I have a question for you, especially on the Midwest, especially with the price per door is a little bit expensive, especially in Phoenix compared to Missouri, like St. Louis or maybe the Tennessees. So what again was the upside to choose, especially Arizona, especially with the high price per door?
And I'd call Arizona really Southwest. But when I started, Phoenix was a lot cheaper, and same with Tucson, quite honestly. Our
Mm.
first deal we bought in Tucson was 37,000 a door, and I paid,
Wow.
yeah. So and that wasn't
Not
that long
anymore.
ago.
Not anymore.
Yeah, yeah. I should have bought the whole neighborhood at that
Yeah,
price.
yeah, yeah.
Um, but yeah, prices have skyrocketed because people have realized, well, one, they got into multifamily. There's a lot of capital chasing these incredible returns.
Mm.
But living in LA and comparing the prices to Arizona, they're pretty good.
Mm.
Now, can I find cheaper properties elsewhere? Absolutely, but it's also could be a lot further away. It could be not in a city where I might struggle with labor.
Mm.
It might not have the growth that I want. So there's a lot of factors.
Mm.
And there are ways to make money investing everywhere if you're a very astute investor. Um, but this is the market that I chose, and um, um, I'm looking for very good value. Now I've only done two deals in Phoenix because I felt the value kind of you know got skewed. But Tucson, I keep buying. I find like I have really good value. It doesn't mean I won't still buy more in Phoenix if I find something that works for me. But I haven't found too many things that I've gotten excited about.
I think the market fundamental recently in the last 3 years was really strong. including the immigration to Arizona in general. That's what's driving a lot of active syndicators or sponsors to move to Arizona's. But my question to you, which is I think is going to be interesting, is how you started dealing with a remote system to basically manage your syndication, including the property management, the daily day-to-day stuff. So what was the beginning for you to deal with the remote approach?
So we're not property managers, we're asset managers. We hire a third party property management company. So they're local. They've been doing this, for many, many, many years. They've got the experience with the vendors, but operating in just a couple of markets, we can be experts in those markets. We could look at our properties, and then look at properties that we want to buy. We're not chasing deals all over the country,
Yeah.
where we just can't be experts in all those markets. So focusing on a few, we're constantly in the marketplace looking for new deals, and it allows us to pop in on our property unannounced, to keep our team on their toes. Now, we're not trying to catch them doing something bad. I'd rather catch them doing something good, quite honestly. But it allows us to really know the market, and so when we see something we like, we can jump on it because we have that experience.
So right now, what is your the number of units under or number of assets under management so far?
I think we're about 160 million. I think right now we've done total 240 million, and I think we've got a little over 1,200 units under management, if I'm not mistaken.
So I think there is a thing is that always is a change on face when you start and then when you settle about choosing the asset class. So what was the beginning for you when you choose? Did you choose it to B product or C product? And what is the change now after almost 5, 6 years on syndication?
Yeah, obviously was too expensive for us to get in. So we started on C, something that was a lot more affordable. We've done some Bs, we've done more Cs. We're looking for value. When you've got to also look at, a year, 2, 3 years ahead, where, is this neighborhood changing? Is this, if you're in a C asset class, does that, if we hit a recession, can people afford to pay? And if not, are there programs in the area, which there are? So we're constantly evaluating, where we want to invest our money and our investors' money to maximize their returns and to minimize risk.
Hmm. You started an issue now, which is dealing with passive investor. What was the beginning for you for raising capital and dealing with passive investors, especially on Arizona's market? And right now, I think there's like a change on the market. It's affecting raising capital in general, especially with the recession. But tell me, what was the beginning for you on raising capital?
Yeah, you got to start somewhere. And my first deal, I didn't raise much. It was,
Mm.
but each deal you get better at it. You build your audience. The more deals you do, it starts steamrolling. Particularly when you go full cycle, and we've done, outperformed on all of our deals so far. Knock on wood. That builds a base. People trust you. We wrote an Amazon best-selling book, Best in Class. And so having these things lets lends credibility to yourself. I'm not overselling. I'm just communicating to people about opportunities and building our email list. And it's a process. It takes time. You can't go from 0 to 100 overnight. You've got to build it up and be consistent about it. Um, but I've got investors that come back each time. They bring a friend, so it gets easier. But like you had mentioned earlier, yeah, raising money in the last I don't know 4 or 5 months
Yeah.
really was a lot tougher because the people were scared. They watch the media, and media is you know creates a fearful environment. I feel like investor sentiment has changed in the last month. They're getting more positive. It's been back to easier to raise. Not like before, we'd have a webinar by the end of the night, we'd be fully raised. It takes a little bit more time. But people understand that multifamily is a great place to put your money. We're a very strong operator. So you get there. It may take a little bit longer, but you know I've been doing this long enough to know how much I can raise, and you partner with other people that can help, you know, help raise money and deal with investor relations and help with other facets of the deal. So real estate is a team sport. You can't do it by yourself.
I want to discuss with you this is a team sport part, but one of the objection I like always with passive investor is comparing syndication to REITs. So what was like your experience with investors, like challenge you on the benefit and advantages of a REIT versus syndication?
Yeah. A REIT, there's a lot more fees, just not nearly the upside that you would get on a syndication. Um, um, it's not a great investment. A lot of people don't know about real estate syndications. Just a very small, percentage of the population really know about it. But it's if you invest with the right operator, you can make much more money. You get the tax benefits. You don't get the tax benefits with a REIT.
Mm.
um, so it can be a much more lucrative investment for passive investors.
100%. I see one of the advantages of break of day capital is the strategic, I think, partnership. I think you're focused more in, as you mentioned, in Arizona, but are you open for more like a strategic partnership on other states as a um, like
Yeah, co-sponsor.
yes.
Yeah, I mean, we would have to be the lead. I have some friends in other areas that have sent me deals.
Mm,
I'm looking for people that I know, like, and trust that are experts in the market. And we haven't pulled the trigger on anything yet, but we've certainly looked at other deals that, from people that I think very highly of. We've just been tied up with our own deals, but that's something that we've looked at.
mm. As you mentioned, the recession here, what was the impact really you see on the flow of deals on the last 4 months, especially after I think 4 times the federal bank is like raise the interest. What was the impact of this on Arizona, especially on Tucson?
Yeah, so I've sold a deal recently. I bought a few deals, so I've been on both sides of the fence. Sellers aren't, owners aren't bringing deals to the market, or putting it on the market because we're getting 10, 15, 20% discounts right now. However, there are off-market deals to be had. We have very strong broker relationships. So, we keep in touch with them and say, hey, what do you got? And they say, here's a deal. If you hit this number, this is yours. So they're not marketing deals, but there are deals to be had. And to me, it's a great time to buy. I'm paying 2% more for debt, but I'm getting, 10, 15, 20% discount on the purchase.
Mm,
So
mm.
I like those, I like that arbitrage.
For sure. You mentioned something about syndication, and every sponsor here knows that we cannot do everything by ourselves as team sport. Can you tell me how is you able to formalize your break of day capital? Like, what was the upside of partnership with other people, and what you were looking for to formalize your team?
Yeah, I've got three full-time people with me now. So we have a great team in-house, but certainly, if we're looking for more capital, maybe on a huge deal, you need some net worth or liquidity. So you build relationships with people over time, people like and trust, um, that are doing good things, that bring some expertise. Those are the people you want to partner with. That I can't take down a $59 million deal by myself, not yet at least. And so we did that recently. We took down a $37 million deal. We had some other partners, that contributed to, like I said, net worth, liquidity, some capital raising. So they're excited to be in a deal in Tucson. Um, and it helps me. So we all, it's a win-win.
Can you tell us more about Tucson, about like the actual market fundamentals there, like the actual, for example, the physical occupancy, the cap rate, especially the spread between class B and C, especially in the last 3 years. There's no much spread, especially between the C and B. What was again the latest numbers on the cap rate, especially in the last 2 years?
Yeah. So speaking about the cap rates, before you might look at a deal anywhere from 3.75 to a 3 on a B class, on a C class. It might be separated by 25 bips. I don't know. It's certainly shrunk. Um, the reports are always higher. Like you look at
Each week.
CBRE says it's 4.5. I'm like, I love to find those deals. I haven't seen it. So just because the reports say one thing, that's really, if you're in the trenches, that's it may include like D properties or whatnot, that
Mm.
it's really throwing it off. Um, but the cap rates have shrunk. Absolutely. You're starting to see them go back up in the last few months, maybe by about 35 bips.
Mm.
It's for me, we're always looking at where we can take the deal, quite honestly. So the current deal that we're doing right now, I think it's a going in cap rate of about 3.5, which is okay. It's not great, but we know we can really get it to like a 5.5 year one, and then 6.5 year two. So there's tremendous value add. Rents are over $300 below the market
Mm.
rate, and when we renovate them, they're $480 below where they should be. So tremendous upside. And so that's really our focus. We don't focus too much on the going in, but like how much value that we can get out of the market.
So the game always is a stabilization. After you stabilize the property, after adding the value, this is what you're looking for.
Yeah, we're not long-term holders. Right now, our philosophy is maximize the IRR, do our value add play, and then look to sell. We don't refi. Because once you've done the huge lift, then your IR kind of flattens out. So we want to maximize the IR and then look to sell. That has been our philosophy. It doesn't necessarily mean that'll be our philosophy 3 years from now. We're always looking to stay ahead of the curve, and right now, this to us, this is the best way to maximize money.
I think right now the problem, this approach was in and out within 2 to 3 years, was really popular in the last, I think, 4 years, between 17 to 21. But right now, I think with the new interest rate, do you think this is going to be the optimum approach for all of the syndicator later on, especially with, I think, as we can say, corrected markets?
You know, I disagree on the corrective markets. I think come January, come February, um, so they're going to raise the Fed's going to raise the rate probably 75 bips coming up. I don't think 50-50 that they raise them again. And then soon after they're going to need to start bringing it down. It's historically every time they start raising rates within 18 months they start bringing it down again.
Mm.
So that's something we need to be looking at. Real estate is still a great place to put your money. I don't think there's going to be a correction. The correction is now. Like if you want to, now's like a really good window of time. But I think there's a lot of dry capital sitting on the sidelines, and people are going to be needing to buy homes and whatnot, and everyone's sitting on the sidelines. But come January, February, the activity is going to get frothy again, in my opinion.
I think that the toughest question here in the show is how you see your superpower and strengths.
Yeah, yeah. Superpower in what?
Strengths. Strength.
Sorry, one more.
Strengths.
Oh, yeah. Sorry. Um, asset management. I could see the deal from a high level. And I'm constantly, stress testing, testing our property management company, staying on top of all these different things. We don't just, pay attention in the beginning and then like, oh, this is a new shiny deal that we've got, and putting our attention there. We know the deals that we have are more important than finding a new deal. We need to make sure we take care of those deals first, and then we could look for another deal if we have the bandwidth and we're taking care of our current property. So putting the deal together, high level asset management, I feel are my superpowers.
You mentioned that you've been your start was basically on a single family home. Can you tell me who was like your influential mentor to do this jump to multifamily, and who was like your influential mentor in the last 4 or 5 years?
Yeah, there's a lot of different mentors. I joined the Sumrock group, and it was more about the mindset of
Yeah.
partnering up with other people and going bigger. That was the greatest thing that I learned from that group, and being around others, having that energy and like-minded people. That was key. I've also gone to a lot of meetups, so there wasn't like really one single person that was my main mentor, but there was a lot of different influences that helped me along my journey. And you don't want to just have one voice. You want to have multiple voices of to bounce ideas off of and whatnot. But certainly, I'm thankful for a lot of friends, a lot of good people along the way that gave me advice, or I was able to bounce ideas off of, and the partnerships I formed.
For sure. I like your presence on social media, but my question now is how the people can approach you and follow your success, especially Break of Day Capital. So how the people can approach you?
Yeah. Certainly they can go to our website, breakofdaycapital.com, and they could book a call, they could fill out an investor application, they can get on our mailing list there. We're on Instagram, LinkedIn, Facebook. So definitely, follow us, reach out, connect, um, and go from there.
I hope it was fun today, and I hope that you come back again to the show to talk more about the success of Break of Day Capital, and appreciate your time today, Gary.
Thank you for having me, Adam.
Thanks a lot.